Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. All right, now in this particular video, we are going to be talking about a very important concept. Okay, a very important concept in the world of trading. Now, if you have been a trader for a while, you might have come across situations whereby let me just look for an example of such situation as I explained. A situation whereby you are in a trend, right? For example, we had a bullish trend here, and then it felt as if there was a breakout just for a little bit, and then you have just a brief breakout, and then before you know it, you have a continuation of a bullish move. Sometimes such situations could be a trick by market makers. Sometimes it might be the market makers deliberately tricking retail traders. All right. So now, are you tired of getting caught in market traps like this? Have you ever wondered how big players like market makers manipulate price movements to their advantage? Today, in this particular video, we are going to be looking at market makers method. Okay, it's a powerful approach to understanding market behavior and improving your trading strategies. So you might want to stick around, and by the end of this video, you're going to have a clear idea of how to align your trades with the strategies of the market makers themselves. Now, before we dive in, make sure to hit the like button, subscribe, and turn on the notification bell to stay updated with more Forex trading strategies. All right. Now, the market maker method is often abbreviated as MMM. So if you have come across MMM concepts in Forex, it refers to the market makers method. Okay. Now, this method is all about decoding the hidden movements of the market. All right. Market makers are, those big institutional players, and they usually use their power to manipulate price, create traps, and ultimately guide the market to where they want it to go. For example, now, if the market makers have recognized a bullish trend, for example, if we are in a bullish trend and the market makers want to get to, let us assume that the market makers have already entered their positions, and perhaps they want to stack up more positions in the direction of the trend, and they want to get to this point. Let's assume that they want to get to point B. All right, they want to get to point B, and if you were going to be following the direction of the trend, it means that price is not supposed to break below this trend line, right? So let's say this is point A, and ideally the price is supposed to continue to bounce off the trend line going up. But if the market makers perhaps want to buy at lower prices, if they want to buy at lower prices, sometimes they might trick retail investors, and you might see a false breakout. You might see a false breakout, and after that false breakout, the market makers can then buy more, more of that asset at lower prices so that they can get more gains. Right? So now, in a situation whereby you notice a false breakout and suddenly you have a continuation of a bullish structure right after a bullish trend, it is possible that market makers were at play, because this is literally a bullish structure. Can you see that we just finished having a bullish structure and we had a false breakout and suddenly a continuation of a bullish structure? There was no consolidation. Immediately after the breakout, we had a continuation of a bullish structure. So this is possibly market makers at play. Possibly. All right. Now, one thing with these big players is that they leave behind patterns and clues that we as retail traders can learn to recognize. Okay, so by understanding their methods, we can avoid falling into their traps, and more importantly, align ourselves with their strategies. Okay. All right. So let me just get rid of this and this. Now, let us break down the three phases of the market makers method. Okay, understanding these is key to spotting their movements. Now, the phase one is what we call accumulation, right? The phase one of the market makers method is accumulation. Now, this is where market makers quietly build their positions, okay? Quietly build their positions. Now, for example, you often see a range bound market within this period of accumulation. For example, we can see that at this period, we had a range bound market. We had a range bound market around here. All right, we had a range bound market around here. You will see price moving sideways. This phase can trick retail traders into thinking the market isn't going anywhere. Now, the phase two is manipulation. Here's where things get interesting and dangerous. Market makers create fake breakouts. They create fake breakouts or breakdowns, luring traders into bad positions. And then this is where most retail traders get trapped. Recognizing these fake moves is crucial to staying ahead. For example, now, in as much as this period was still a period of consolidation, you would notice that the consolidation was more prominent within here, right? I'm just going to use another color for this. Okay, so we can see that this period was more. This was the main period of consolidation. Within here was the main period of consolidation. Right after the accumulation phase, the manipulation phase. After the accumulation phase, the manipulation phase is where there seems to be a breakout. So this could be a possible manipulation. The retail traders will think that price is going to continue downwards, all right, and they end up entering sell positions or entering a bad position. This is an example I'm giving, all right, so I'm going to be using this example to explain. So if it was a fake bullish breakout, it would have been a sell trend that will continue, but in this case it's a fake bearish breakout, so you can see it was a buy trend that continued. So right after this fake breakout, retail traders might end up opening sell positions, and then before you know it, the phase three comes in, which is the distribution. The fact that the phase three is where the market moves decisively. The market moves decisively in the direction that the market makers intended all along. And in this case, we can see that it was actually a bullish direction all along. All right, so we can see that this was a phase of accumulation, then this was a manipulation phase, and then here we had the distribution, because this is where the real opportunity lies. If you can position yourself correctly, you're going to make a lot of pips from this distribution phase. So once you have been able to observe the accumulation phase, you watch closely and you notice that there was a manipulation right after a consolidation. There was a false breakout, a significant false breakout, and then right after the false breakout, you might see a brief consolidation, or you can even see very, very tiny consolidation, and then you have a move in the opposite direction of the breakout. That could be a very good opportunity to enter a trade that could last for a long time, right? You can see how this trend lasted all the way up to this point, and we even had another false breakout here, and then a continuation of the bullish trend all the way up to this point. So if you had identified these patterns on time and you had entered a buy trade right around, let's say, this point, you would have caught a lot of pips. Okay, you would have caught a whole lot of pips. All right, we're talking about, this is about 1,200 pips, right? So that would have been a very big move. Okay, so now that we understand the phases, let us look at some key patterns to watch out for. All right, the first is stop hunts. Now, these are sharp moves designed to trigger stop losses. Okay, they often happen at key levels like support or resistance. For example, even in this situation, those who might have decided to trade this ranging market, ideally, you would have set your stop loss below the support zone, right? You would have set your stop loss below the swing lows, right? But then we can see that market makers sometimes make use of stop hunts. You will notice that there will be a false breakout, that will hit your stop loss, and then eventually you see price going back in your direction. So that is one of the patterns to watch out for. If you notice a breakout after a consolidation, watch closely. Do not rush. Okay? That is for those who trade breakouts now. Do not rush to enter a sell in the direction of a sell breakout or enter a buy in the direction of a buy breakout, because it could be a manipulation. All right. And if you are trading a consolidation market, then just be careful, okay? Because you could actually have a false breakout. Now that is for stop hunt, okay? When the market makers hunt stop losses and then the price continues in the direction of the trend. Then the second pattern to watch out for is actually the fake breakouts, where price breaks out of the range, only to reverse quickly, like what happened here. This is the classic manipulation technique. Now, the next pattern to watch out for is a W pattern. A W pattern is often seen at the end of a downtrend. It signals accumulation and a potential move upward. And we can see that this happened here. We had the W pattern here. Can we see this? Can we see this? Can we see this? And then this, right? So we can see we had a W pattern. We had a W pattern around here. This signaled that after the accumulation phase, there was a manipulation around here before we finally had the distribution. So this is very important to understand. It's very important to watch out for. If you wanna trade in the direction of market makers, okay, and if you want to avoid getting falling for their tricks. Now, as for the opposite of a buy trend, this is the situation for a buy trend, right? Or a bullish move, a bullish distribution. If we're going to have a bearish distribution, that's where the M pattern comes in. M pattern is seen at the end of an uptrend. It signals distribution and a potential move downwards. That's the case for an M pattern. But for W pattern, it signals a move upwards. Okay, now here are some practical tips to help you use the market makers method effectively. 1, stay patient. Market makers thrive on impulsive traders. Don't jump into trades without proper confirmation. All right. And then secondly, use key levels. Pay attention to support and resistance zones. These are often where manipulation occurs. All right. And then thirdly, combine with technical tools. While MMM focuses on patterns and behavior, pairing it with indicators like moving averages or Fibonacci levels can actually strengthen your strategy. And then fourthly, work with smaller time frames. Okay, you can see I'm currently on the 1 hour time frame, not the daily. It's not like you can trade on the daily and all of that, but when you want to catch market makers tricks, you can do yourself good by going to smaller time frame. You don't have to go to the 5-minute time frame or 15 minutes. You can actually stay on the perhaps 1 hour time frame. All right. Okay. And then let's talk about mistakes to avoid when using the market makers method. 1 is chasing the market. Don't react emotionally to sudden price movements. And secondly, ignoring confirmation. Always wait for patterns to fully develop before entering a trade. All right. Watch out for key chart patterns. Watch out for patterns like this. All right. And then keep things simple. Do not overcomplicate your chart. Too many tools can distract you from recognizing the market maker patterns. Too many indicators on your chart can make you to skip patterns like this. The accumulation, the manipulation, the distribution, right? So if you notice any of these patterns, when you notice a consolidation and you notice a false breakout, it could be that a manipulation is ongoing and a distribution is about to commence. So when you have a lot of indicators on your chart, clogging your chart with indicators, you might miss out on these potential moves. So by now, you should have a solid understanding of the market makers method and how to use it to spot manipulation and align your trades with the big players. Remember, trading isn't about beating the market makers. It's about working with their flow. If you found this video helpful, smash that like button, subscribe to the channel, and hit the notification bell so you never miss an update. Drop a comment below if you have questions or want me to dive deeper into any specific topic. Let us keep learning and trading smarter together. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.